Well, hello everyone and welcome to today's Moomoo presentation, 2025 Australian federal election. Investors, who will you vote for? Thanks for joining us. My name is Michael McCarthy. I'm the CEO at Moomoo Australia, and today I'll be speaking to the issues for markets and investors that have come out of the election campaign. Now, unfortunately, my colleague Jessica Amir is not well and won't be with us today, so I apologise for all of Jessica's fans who I know have joined us just to see her, but you'll have to bear with me today. And today we'll be looking at the federal election campaign over the last 5 weeks, how it's affected markets so far, and have a look at the potential result on the weekend and what that might mean for the Australian share market come the open on Monday morning. But before we get too far into that, there's a couple of important things that we have to bear in mind. And if you take a moment, please, to read this screen, you'll see that Moomoo Securities Australia is licensed by ASIC, and our Australian Financial Services license number is on the screen there in front of you. It's important for everybody watching today and for everybody involved in markets to remember that investments carry risk, that risk and reward are related, and those who seek rewards are taking risks. And those risks means that sometimes investors and traders suffer losses. Everyone should consider the risks involved in investment generally, and consider the terms in our financial services guide and other legal documents before you decide whether or not to use Moomoo's services. Perhaps most importantly, today's presentation is general in nature. I don't know your personal circumstances. And as individuals, we come to the market with different risk appetites, different timeframes, different amounts of capital, different experiences, and different goals. And all those differences mean that the right decision in markets is as dependent on your personal situation as it is on the market itself. So please bear in mind today that the information presented is general in nature, and the decision as to whether or not any of this information is relevant to your situation is a decision entirely for you. So looking at the presentation today, we'll be heading towards the various aspects of the market that provide us with guidelines and signposts for us to follow when it comes to the market. We'll look at how, first of all, how the election campaign has unfolded so far, the ups and downs, and what that has meant for policy, for potential investments, and also for individuals. We'll then look at the policies and the share market impact that they may have, and we've already seen share prices impacted by the various policy announcements we've seen, and what we might be expecting in the future. We'll have a look at what's ahead for investors. And then perhaps the most important part of the presentation, we'll turn to your comments, your queries and questions, and do our best to get to as many of those submissions. And many thanks to those who have sent through their queries and questions. So looking at, first of all, how the campaign unfolded. Here's the timeline. And as you can see, we kicked off the actual campaign on March 28th. Now, the coalition coming into this campaign had moved ahead. If you cast your mind back to 2022, May 2022, when the Labor government was first elected, they were elected with a clear majority in the lower house and a workable coalition in the upper house. And so at that stage, the Prime Minister, Anthony Albanese's personal popularity was very high, and it was considered that there was no chance that the coalition would put themselves in a position to be elected into government by this time. And yet, somehow the coalition led by Peter Dutton did so, and by the end of last year, they were considered real contenders. In fact, in betting markets, they'd moved into favouritism to form the next federal government. So coming in on March 11, we took a measure of the betting markets. At that time, the coalition were paying just $1.80 for a $1 investment. In other words, they were odds on to win the election. Most of the polls at that time had the two-party preferred vote at 51 to 49 in favour of the coalition. Then, because of the delays caused by the cyclone Alfred up in Queensland, the federal budget was delivered in a surprise. Nobody was expecting that this budget would be brought down because we were expecting that the election would have been called. But of course, Cyclone Alfred changed all of that. And so we did see a federal budget, and that had the impact of framing the potential market impact policies ahead of the beginning of the campaign. So on March the 28th, a few days later, the election was called. And from an Australian point of view, it's perhaps unfortunate that just a few days later, on April the 2nd, President Trump in the US declared his Liberation Day and imposed tariffs on every trading partner. And of course, while the federal election is very important to the Australian share market and to Australians generally, when global markets move, it's very hard for the Australian market to do anything but go with them. And that's exactly what we saw. So to some extent, the market impact of this election campaign was derailed by actions in the US. And so what the theories that we'd formulated around that were derailed somewhat by the fact that this huge external influence was also affecting the Australian market. And it wasn't just the overall market outlook. It fed into specific stocks and sectors that we're looking at in terms of the potential impact of the federal campaign on them. And those global factors also came into play. Now, that's not to say that the policies and the announcements that have come through the campaign didn't affect the market. They almost certainly did. But those external factors made it sometimes hard to separate out what was driving the market. But there's no doubt that some of the policy announcements we saw over the course of the campaign had an impact. On April 29, just this week, we saw the Liberals return to power in Canada. Now, the Liberals are the progressive side of politics in Canada. Don't be fooled by the name. Locally, the Liberals are the Conservatives, but in Canada, they are the progressive side of politics. And it was widely thought after 10 years that they would be turfed out on their ear. There was a lot of dissatisfaction with the direction, both socially and economically, of Canada. And 6 months ago, it was almost assured that the Conservatives would form the next government in Canada. But the impact of President Trump on the globe, and particularly on Canada, was probably the main factor in determining the Liberals being returned to power. And to some extent, we've seen a similar impact here in Australia, because the coalition, having entered the campaign as favourites, are now long shots to form the next government. And the Labor campaign has no doubt been superior to the coalition campaign. And the external factors, those drivers that affected the Canadian election, appear to also be having an impact here. And as we head into the election on Saturday, it's fascinating to see how much that two-party preferred vote has shifted, with a poll released this morning suggesting that that is now 53 to 47 in favour of Labor, and the betting market's reflecting an even stronger move. Now, you remember I mentioned earlier at the beginning of the campaign, a $1 bet on the coalition would return $1.80. That will now return $5.80. And that's how much the perceptions of who might win this election campaign have changed. And in contrast, the Labor Party have been backed into very strong favouritism, around $1.60 for $1 invested. So it's very clear that betting markets and the polls are reflecting the same thing, that Labor has, over the course of this campaign, outdone their opponents and is now a clear favourite to win the election on Saturday. Now, we need to take a cautious approach here, because we're in a very similar situation heading into the 2019 election, and we got a surprise result. And the reason for that is very clear. Polls are blunt instruments. They are very broad-based, and they tend to measure the national interests. But each seat has its own specific factors. And while much of the talk in the campaign is about Labor and coalition, when voters actually go into the polling booth and pull out that sheet of paper, it doesn't say Labor or Liberal, it names individuals. And that individual factor is a very hard thing to measure ahead of the actual vote. And things can change. And of course, sometimes people don't tell pollsters the truth about what it is that they intend to do. So there are all sorts of factors that suggest that even though the polls and the betting markets clearly indicate a Labor government coming up, that there is still potential for surprise. It's much less likely, of course, but anyone who claims that one side or the other is a certainty at this stage is either fooling themselves or attempting to fool you. So that's the way the campaign has unfolded. It's been a very disappointing campaign for the coalition and a strong campaign for Labor. They've kept their attacks on the coalition very simple, and they've laid out a number of policy initiatives which they believe voters will reward, and keeping their messaging on tune and focused, they appear to have taken the upper ground, at least in political terms. So quite a change here in markets. Now, if we go to the next slide, you'll see how this has impacted the market over time. And now this is a longer term chart. On the left there is September of 2022. So you can see that the market has certainly increased over the years. That touch of the first yellow line you can see on the left of the chart, that yellow line's at the 7,600 level. That was the third time the market had risen to the level. And at that time, that was the all-time high for the market. So in the middle of the chart, when the market finally broke through that 7,600 level, you can see what the impact was. It went substantially higher, having failed at that resistance level a number of times. And we've got a similar situation as we headed into this year. You can see at the top yellow line, there are 3 times that the market attempted to break through that level. Now, that line is at 80.60, just below the 8,100 mark for the Australia 200 index. And you can see that the market failed at that level 3 times before finally breaking through and going higher. And in the process of going higher, you can see that once the level that was once resistance, 80.60, became a very important support. And the market bounced twice off that level before hitting that all-time high in December on the right of the chart there. Now, we've seen pressure ever since. And of course, once the market then fell back through that 80.60 level, it opened up the possibility of significant downside risk. And that's exactly what we saw with that move in the market that took us down below 7,200. Now, while this happened during the election campaign, it seems fair to say that that was not due to anything said by either party in the campaign itself, but rather was in relation to the tariffs introduced by President Trump and the fears that brought about in the global investment community about the potential for global growth and the potential for some dramatic falls in asset prices. And so while we were conducting the campaign here and no doubt seeing some impacts, the major impact on the market had nothing to do with the election campaign. And it's an important lesson for all of us. Markets are linear in nature. They can only go up, down, or stay where they are. But the factors that drive them are not linear. And sometimes some factors are more important than others. In the absence of the tariff moves from President Trump, the election campaign might have been even more important in terms of determining market direction. But as it is, we have to try and separate out the different strands. Now, as you can see, the market has since recovered after that big sell down to levels just below 7,200 to be back at that important decision zone. And so what happens on Saturday could have a big impact. But we'll come back to that picture and have a look at it again soon. So what are the policies and the proposed policies that might affect the share market? Well, there are a number of sectors, and these are not the only parts of the economy that will be affected, but they're the ones that our analysts have highlighted as potentially being tradable in the market. That is, that there are companies and stocks that will be affected by potential changes to the policies around energy, around vehicles, and in particular cars, around housing, around childcare, and potentially around supermarkets. So let's take a little bit of time now to have a look at each of these potentially impactful policy areas or areas of the market that might be impacted by policy, because this is where potential investment and trading opportunities might live. And of course, one of the biggest areas of difference between the parties contesting to form government, the coalition and Labor, is the differences in energy policy. And this is one of the few areas where we do see very stark differences. We know that Labor has a very comprehensive renewables approach. Now, initially, when this all renewables approach to electricity generation was proposed, it was thought that it would be firmed by hydro and green hydrogen. Unfortunately, neither of those have come to fruition, with the Snowy Hydro project falling in a hole quite literally. The digging machine is still stranded, and the costs there having blown out from $2 billion to $12 billion with no resolution of the problems in sight suggests that Snowy Hydro might not be the contributor to firming agents that the government once expected. And it's a similar situation with green hydrogen. The green hydrogen technology is theoretically possible, but practically impossible because it's so expensive and inefficient in terms of creating and storing electricity. And that leaves us with batteries. And while batteries are being built, there's no signs yet that we're anywhere near the capacity needed to firm a system as large as the Australian electric grid, and gas. And I raise that as part of this because this is the part of the policy that Labor has attempted to downplay, and the reasons for that are very clear. Most of its partners in politics are on the left side of politics, and they have strong environmental stands. And fossil fuels to the Greens, for example, are anathema, and they're trying to get rid of them as soon as possible without any regard to the economy or the impact that might have on standards of living. They simply see it as an imperative that all fossil fuel production must stop immediately. That, of course, isn't realistic. And despite the purity of their undergraduate politics, the Greens don't really offer any economically viable way of powering Australia. And so it does appear that gas will have to be part of the mix, but at this stage that has not really been acknowledged by Labor. They've left it outside of their subsidised energy schemes. They're not acknowledging at this stage that it might have a more important role to play, but they may be forced to acknowledge that if they're re-elected in government, because there's little doubt, and as we heard from the former Prime Minister of Britain this week, Tony Blair, that it's time to stop the nonsense and speak truth about what energy policy really means. And rather than taking the purest undergraduate approach of a zero approach and damn the consequences, balancing that need to phase out fossil fuels with the needs of the people, the populations that those energy reserves supply. So Labor have proposed a number of initiatives in the space, though, that could have an impact. And as we can see from these initiatives, they remain committed to their renewables strategy. So they've offered an additional $150 relief on electricity bills. In economic terms, this is not really much help. It doesn't slow the underlying core inflation. It merely shifts its impact around. And while individuals and households are no doubt relieved to receive that subsidy on their electricity bills, economically it doesn't do much. The $2 billion for the Clean Energy Finance Corporation, however, is another matter. And although Labor have promised $10 billion and only delivered $2 billion so far, that push into renewables and the subsidies for it make those businesses more attractive. Now, from an investment point of view, that's a little unfortunate because a lot of the investors in Australia's renewable landscape are either international companies or privately held companies. And the companies that do invest in renewables here in Australia and are publicly listed tend also to be invested in fossil fuels. And we're talking about companies like Origin Energy and AGL here, who still produce most of their electricity from fossil fuels, but are pushing into renewables. So there's very few clean plays available in renewables to take advantage of that policy unless you're prepared to acknowledge that fossil fuels remain in the mix. So Labor remain committed to getting the energy grid to 82% renewables by 2030. That, frankly, now looks impossible. The building required would not only require huge sums of money, but it would require resources we simply don't have in terms of skilled tradespeople to build, to construct and build those renewable powered generating capacity. So that needs to be abandoned. It's another reason to think that the Labor Party, if re-elected, might acknowledge the role of gas. And Labor have also agreed to or have looked to a scheme that will reduce home battery costs by 30%. That is their alternative to gas. Unfortunately, at this stage, the take-up would have to be incredible for them to reach the sort of battery capacity that might mean that gas would not be part of the mix. And you might think I'm harping on about gas, but there's a reason for it. Because if we look at the coalition's energy possibility, their proposals and their policy proposals, they're looking to ramp up domestic gas enormously. They want to bring a number of large fields into play, and they're going to use gas as the firming agent in the renewable transition. Now, to be frank, this is just an acknowledgement of reality, but goes to show how distorted the energy debate globally and locally had become, that people didn't feel that they were able to say that gas should be used as a firming agent out loud. The coalition, however, goes further than this and shows that they're not necessarily committed to the eradication of fossil fuel use, and they are proposing that further gas fields be opened up for export. Now, the truth of the situation, once again, is away from the headlines, that Australia's prosperity has been built largely on agricultural and mining product, and recently iron ore, coal and gas have been those three commodities that have driven the economic success of Australia. So speaking of gas as an export is economically a very good idea, but politically is nowhere near as popular. And speaking of unpopular, the proposal to build nuclear power plants and projects through to 2050 has received a scathing response from some quarters. Now, it's an interesting situation because 21 of 22 developed economies are using nuclear energy. Australia is the outlier here. And yet locally and throughout this campaign, the response to any nuclear proposals has been scathing. At some stage, Australia will probably move back into line. But once again, while the economics of nuclear generation are quite compelling, the politics of it remains quite toxic, at least here in Australia, which leaves us with the conclusion that it's gas stocks that might be of interest after this election, no matter who gets elected. And they're certainly well on my radar. Now, BHP, not such a large producer these days, but Woodside, of course, is wholly in this space. Unfortunately, or fortunately, from an investment point of view, Woodside has made its largest investment ever in Louisiana in the US, with a $17 billion commitment to an LNG processing plant there that will export gas around the world. And that not only serves Woodside's and the US interest, but it speaks to an idea that gas is regaining, the producers of gas are regaining confidence that their product will be needed for a lot longer than many of the current expectations reflect. And then you go into the purer plays. Santos, which has the Narrabri gas field, which is currently undeveloped, but could be given a green light if the coalition were elected. Beach Energy, which has Bass Strait assets and Cooper Basin assets that could be tapped if Victoria changes its stance on gas. And so these are some of the real plays. In terms of potential future plays, Tamboran, which have gas fields in Batuta in the Northern Territory, have real potential as a future gas giant. It's interesting to remember that Woodside was started 50 years ago. It's named after a small Victorian town, which is on the coast near the Bass Strait where Woodside first started off. It's now a tens of billions of dollars company, and Tamboran's start in the Northern Territory looks a lot like that early start that Woodside had. But of course, what happens 50 years down the track is almost impossible to predict. The other groups that might benefit from energy policies include the uranium stocks, Paladin, Boss Energy, Deep Yellow, just to name a few. Now, they've been running, or they ran hard into last year on the back of the idea that the US would be using more nuclear energy, and that around the globe, the need for electricity to drive artificial intelligence models meant that the nuclear was the answer to a lot of the issues. So once again, external factors have come into play, but internally, the election itself was also a factor. So turning now to vehicles, we can see that Labor has given undertakings to maintain electric vehicle leasing tax exemptions and has not backed away from the new vehicle efficiency standards that it's seeking to introduce in 12 months' time. These will make a big difference to the way Australians buy cars. On the other hand, the coalition wants to scrap the tax exemption for the EV lease tax and have introduced a scheme to cut the petrol excise by 25 cents a litre. So in other words, halving that excise that's currently charged on every litre of petrol that's pumped. So clearly here there's differences in the policies of the two parties, with Labor being very much in favour of electric vehicles and Coalition allowing the petrol-powered vehicle to stand. And when we know that the appeal that the Coalition is trying to make to the outer suburbs of the major cities involves a lot of people who drive trade-related trucks, like utilities and four-wheel drives, and that they are a clear target for the Coalition. So if the Coalition were elected, those companies such as Eggers Auto and ARB Corp might well be beneficiaries, as they're likely to see increased activity related to utes and four-wheel drives, and that, of course, drives demand for the products that both of them sell. And there are other vehicle manufacturers and parts manufacturers and associated industries listed on the Australian Exchange. So a coalition being elected could see a swing back towards support for those traditional parts suppliers in the automotive space. So lots to think about there, and still a day and a half to look at trading or positioning ahead of the election for those who have a view. Another potential area of impact is housing, and Labor has proposed giving relief in housing across the board. And the reasons for these policies are very clear. The Australian electorate is struggling with cost of living pressures, whether it's energy prices, grocery prices, the price of rent, or even the price of mortgages. The impact on Australian households of the lift in prices and inflation has been quite severe. And that has been one of the main framers of this election campaign. So Labor, in promising 5% deposits for first home buyers and a $10 billion fund to build homes for first home buyers, is a good gesture and politically makes a lot of sense. Economically, though, very hard to justify, because if the major issue here is around the cost of housing, then allowing home buyers, first home buyers, to buy with only a 5% deposit is likely to drive up house prices, not drive them down. In other words, it's only going to be short-term relief to very few buyers and will hurt most new buyers. And while it's good to see that governments understand that supply is one of the key issues here, the reality is, with all the government infrastructure projects being run by state governments around Australia, the number of people available to actually build homes is very low. So having $10 billion available to help subsidise and build those homes is great, but given that there is no capacity in terms of materials and labour to build those homes, it's a little bit of a hollow promise. Once again, good politically, not so good economically. And the higher threshold for the co-buying scheme is probably a good thing. That looked like a bad debt ready to be put together. And the reality is very few people are actually eligible for the co-buying scheme. The Coalition have also made promises in this area, and they suffer from the same problems. The building infrastructure for 500,000 new homes is, in my view, a step in the right direction, in that they're not looking to build the homes themselves. They're looking to private enterprise to do that, but they're prepared to put the infrastructure in place. And that is one of the major issues for building. It's the release of land and the building of the infrastructure, the sewers, the roads, the schools, the hospitals, that really is a limit. The problem with this proposal is that the infrastructure is generally state and local government responsibilities. In other words, the federal government has nothing to do with this sort of building generally, and it's a rather curious undertaking to give. One undertaking that has more impact economically and may also have more political impact was the undertaking to restrict immigration to Australia, and particularly to ban foreigners purchasing homes for 2 years. And the idea here is to remove some of the demand from the equation. Whether or not that will actually have an impact is a very open question. There is some evidence to suggest that foreign buying of homes is not the major driver of house prices in Australia. Nonetheless, immigration is an important issue economically for the nation. And restricting immigration means that you're committing to lower levels of growth. Increasing immigration means you're adding to problems of supply, particularly when it comes to crucial issues like housing. So immigration is an issue that cuts both ways, and the leanings that people have tend to reflect more their social views rather than their economic views, because from an economic point of view, immigration is a two-edged sword. So nonetheless, there are residential property stocks that will benefit from any potential increase in building. And it does seem no matter who is elected, there's likely to be an increase, perhaps more so under the coalition with their infrastructure undertaking, if they're able to deliver it. But the sort of stocks we've been looking at throughout this campaign include Stockland, Mirvac Group, Lend-Lease, Ingenia, Lifestyle, Pete, and even some of the smaller ones, Winton Land, Cedar Wood. These groups are all potentially beneficiaries. And as you can see from the charts that have been supplied here, they've already started to move higher on the focus on housing that's been a big part of this campaign. And so the focus on that housing has meant that we're seeing good support for these stocks already. You'll note that they seem to be coming up to areas where they've fallen away before. The election might be enough to push some of these stocks through those previous resistance levels up to a newer trading range and higher highs. So something to look out for as we go into the election and as we come out of it next week, depending on who is elected. Another area that we'll be watching very closely is childcare. And with both Labor and the coalition promising various support for childcare, it appears that childcare will be a beneficiary either way. Labor offering 3 days a week of subsidised care and $1 billion to build more centres, whereas the Liberals are looking for regional childcare and means testing for childcare subsidies. Now, depending on where you are, how many children you have, or whether or not you have children, you'll have different views on which of those policies are the better. But from in terms of the investing impact, the sorts of stocks that might be affected include G8 and some of the property trusts that specialise in childcare centres, Arena REIT, the Charter Hall Social REIT, both specialise in providing early childcare centres and could be beneficiaries if either of those party policies are delivered. There are others in the space that specialise in childcare and education that may be worth a look. And of course, for individual investors, whether or not to buy into this sector will depend on personal circumstances as much as anything else. But there is real potential in some of these stocks, depending on who is elected. And the last sector I'd like to look at before we move to your comments and questions are supermarkets. And there have been a number of promises here, and to be frank, I'm not sure either party are particularly sincere about this, because the ACCC report and recommendations that were instituted by the government basically found that there is no price gouging going on amongst the supermarkets. Yes, they are profitable. They are major businesses that supply food across Australia every day to millions of households. And that means that the numbers involved here are big. But when we look at the margins the Australian supermarkets make at around 4 to 5%, they are slightly better than global averages, but they're nowhere near meeting the level of gouging. And it does look like both sides of politics were quite prepared to pass the blame for inflation away from themselves towards supermarkets when that simply was not backed up by the investigation done by the independent ACCC. Nonetheless, both both contenders for government, both Labor and the Coalition, have made promises in this area. They know that cost of living is the issue that's likely to decide the election. That's certainly what they're hearing from voters. And so they've both given undertakings here. Labor to establish a task force and introduce price gouging penalties. Well, you can penalise what's not happening as much as you like. The Coalition, the potential to break up. This must have had a lot of Liberal Party voters in particular clutching at their chests. The idea that a coalition government would break up private companies for whatever reason is just an extraordinary proposal. And it does suggest that the current coalition are a long way from their philosophical roots. A new competition policy, well, you know, we have plenty of policy. It's not really likely to make a difference in the duopoly there. And a supermarket commissioner, which introduces all sorts of ideas around fat controllers, etc. So nothing to be concerned about there, I would suggest, from an investment point of view. It's got more to do with the companies themselves. Both Coles and Woolworths, as we know, both very good businesses at the moment. Coles doing better than Woolworths, but it's been a long-standing rivalry. The reality is that both of these groups have very strong market positions between them. They control up to 80% of grocery retailing in Australia. And those dominant positions mean they're very hard to dislodge. They're also very well known. And from an investment point of view, that counts a lot in the current environment. And so their stocks, while you might argue that the income streams they get are consistent and reliable, people don't stop eating even when economic conditions are tougher. However, the problem for mine in thinking about these supermarkets as defensive stocks is that they're likely to be, in my view at least, a function of their price. And the price and the multiples that investors are paying for Coles and Woolworths at the moment seem to me to be very excessive. They're trading in the 20s, and that is not a defensive positioning in terms of share price. So the businesses themselves might be considered defensive, but I would argue that investing in them at the current prices is not a defensive move given those expanded multiples. And those who are more interested in that area but would prefer to look at something that's a little less stressed might consider Metcash. Now, it is much smaller than the other two. It doesn't have the dominant market position, and so it can be fairly argued that it should trade at a PE discount, but around 13 times earnings compared to 24 or 25 times earnings for the other two. If you're looking for a defensive supermarket investment, it might be worth considering Metcash ahead of the two better known Coles and Woolworths. Once again, I don't think that either side's policies are really likely to have an economic impact on the supermarkets, and they're attempting to solve a problem which the ACCC has found doesn't exist. So I'm not concerned really about the impact of the election of either of the major parties to government when it comes to the supermarkets. In other words, while I'm not a big fan of the valuations that are currently being reflected in the share prices of Coles and Woolworths, I don't see any policy damage likely to come out of the election of either of the major two parties. So with all of that in mind, we have a look ahead. And if Labor wins, the share market performance is going to be a question. We published a study at the start of the campaign that simply looked at share market performance since 1972. And over that time, there have been 10 coalition governments and 10 Labor governments. We found that there was an outperformance of the share market consistently throughout that period, through those 20 governments, and it favoured the coalition. Now, the Labor government did, however, have the best year. That was 1985, and the return that came in that year was largely due to the structural reforms they brought in, so it's fair to attribute it to them. But the 135% return that year was by far the best in the period we studied. But Labor also had the worst performing years, with the number of years going backwards by double digits. So expect more volatility potentially under a Labor government. Overall market performance on the historical analysis we did would suggest it favours a coalition government. So one to watch out for if Labor get up. The big problem for, I think, Labor supporters is this proposal to tax unrealised gains in superannuation. Now, it's a fairly complicated picture, and I don't want to go into it too far, but the introduction of taxes on unrealised gains would change the entire investment landscape, even if it's only applied to superannuation. So that is something to be very wary of should Labor be elected, and investors should be speaking, especially those with significant portfolios, should be speaking with their advisors about structures that might best reflect any change in policy that will come with the election of a Labor government. If the coalition wins, they've made a number of commitments that suggest that they might, that the reason for outperformance under the coalition is its willingness to get out of the way. Instead of trying to get its hands dirty in the economy and pick winners, invest taxpayers' funds where they see fit, philosophically, a coalition government will head in the other direction, reducing regulation and allowing the private sector to take up the running when it comes to improving the overall outlook for Australia. So that's something to look out for too. I wouldn't expect that to be an immediate reaction in the market, but it's something that may play out over the months and years coming if a coalition government is elected. But the reason this is so important is illustrated on the chart. And as you can see in this chart, there is, I talked before about that crucial level, that 80-60 level. Now I'd like to draw your attention to the bottom of the chart where we're looking at the volatility of the index. This is the historical volatility. That is, it's just moving, how rapidly the index is moving on a day-to-day basis. And as you can see, it's at its highest level as it has been for 2.5 years. Now, volatility and risk are very closely related. In other words, what this higher level of volatility is suggesting is that there is a high level of risk in the market at the moment. And combined with the fact that the market is sitting at a crucial level, 80-60, or just above it at the moment, it touched 80-100 in trading this morning, but sitting very close to that crucial level, we've got elevated volatility and we have a major event coming up on Saturday, that is the election. It does suggest we have all of the makings of a very significant move in the market. Now, the one thing the chart is not telling us is in which direction. We've got a hint there in that they're currently sitting above that important support resistance level at 80-60. And so we might lean towards a positive result from the market. But I think something all investors should be considering in the next day and a half is, are they well positioned if the market makes a very significant move, either downward or upward? Because once again, the market is not, this chart is not giving us a direction. It's merely suggesting that a big move is on the card. So it's a very good time for investors to be examining their risk appetites and their risk exposures in the market because, as I say, this chart is suggesting a big move is coming and investors need to be prepared for that, and it might come as early as Monday with the election result. So lots to keep in mind there in terms of the potential moves coming up in the market and what the impact of Saturday's election may have. I'd like to turn now to some of the questions that have been sent through. Please keep sending your questions through. We are collecting them. We'll get to as many as we can. If we don't get to your question today, please come and join us in the Moomoo community where we'll continue the conversation. There's already a lot of material posted there and a lot of comments, questions and queries from readers and traders and investors. So come and join the conversation there if your question isn't answered as we go through these today. But let's kick off. What party's policy swayed your vote the most? Well, that's once again an individual question. And your answer to that will reflect your individual circumstances. While we do hope that most of the electorate takes a big picture view and thinks about the good of all of Australia, we do know that the hip pocket factor is very important in the way people vote, and how policies affect you personally is a big factor, but of course that will depend on your circumstances. So I lean towards coalition myself because I believe in smaller government. I think that private enterprise and getting the settings right is the role of government. And so I prefer that philosophically. Having said that, they haven't really covered themselves in glory during this campaign putting forward what I think would be economically rational arguments. Will rare earth stocks or nuclear power stocks prosper the most? Well, that's an interesting question because it implies they'll both prosper. And I would suggest that if a Labor government is elected, that the recent buoyancy we've seen in uranium stocks might come to an end pretty quickly. Having said that, they have fallen a long way over the course of the campaign, and so we could well see them remain the same. But nuclear power stocks could very well be beneficiaries if a coalition government is elected. Rare earth stocks, I think, are a special case, though. Rare earths are not that rare. It's actually the processing of rare earths that is difficult. It's environmentally damaging, and it's very hard to get the permissions and facilities right to do that. And that's why there's not so much processing. Having said that, Australia is one of the few significant resources when it comes to rare earths. And so it is an important part of it. But unfortunately, I think the Labor policy or proposed policy to provide a stockpile of rare earths is anti-economic, might end up distorting the market. We heard from the head of Australia's largest producer of rare earths this week, Lynas, suggesting the government stockpile idea was not a good idea. And although the government has pushed back on that, there would be concerns, I think, in that space if they were to go ahead with that plan. So I'm a little concerned about the outlook for Lynas in particular, should a Labor government be re-elected because of that rare earth potential. Having said that, it does appear the demand for rare earths is only increasing and supply is looking increasingly difficult. So I think overall, it won't matter which government is elected, but if Labor is elected, you might see a small setback in the sector before things improve. Which will do better? I can't say. Nobody knows the future. That will depend on a lot of factors. And of course, it doesn't all stop on Saturday after the election. There'll be other factors that affect markets and investing outlooks. And so I can't give you any certainty around that. I lean towards the rare earths. I think that they're valuable no matter who's elected. Is enough being done about the housing crisis? Well, that's a bit of a how long is a piece of string kind of question. Is enough being done? What is enough? Does every Australian have somewhere to put their head at night? Well, we still have homeless, so possibly not. On the other hand, what is the government's role in housing, and what should it be doing is another bigger question. And I don't think anyone believes the government should provide housing for every Australian. And so the answers will depend where you sit on that spectrum in many ways. I would argue that too much has been done, that the biggest issue is a lack of supply. This is a state issue, not a federal issue, but land supply and the release of land and the building of the infrastructure to service that land is one of the key issues in getting more affordable housing in Australia. And as I say, that's not a federal government issue. So I don't think enough is being done, but I don't think it's a campaign issue either. How will the party's policies affect house prices? Well, this is my major objection to both major parties' policies. In my view, both parties' policies in aggregate will drive house prices higher. And this is the difficult part of the housing debate. While people who don't own a house and people who are renting are looking for lower house prices, the bulk of Australians who live in a house that they either own or are paying off mean that lowering house prices will be very unpopular. As much as those who don't have housing might like it, the majority of Australians will be negatively affected by falling house prices. And that's the real reason I believe that we haven't seen substantial policy to bring house prices down, because the bulk of voters actually have an interest in keeping house prices up. Here's an interesting one. Is it wise for migrant investors to vote for either party? Well, that's an interesting question, because in Australia, around 1/3 of the population are migrants. At the moment, almost 2/3 of the Australian population are either migrants or the sons and daughters of migrants. And so with almost 2/3 of the population being a migrant origin, I'd suggest we're all migrants. And unless you have Indigenous heritage, we are, in fact, all migrants to Australia. So I'm not sure. I think, migrants are Australians and Australians are migrants. So I think perhaps the question is about migrants who would like to reunite with some family members who are not yet living in Australia. In that case, I'd suggest that the overall approach to immigration by both parties. Although one party is prepared to say that they'll reduce immigration, both of them are going to introduce immigration one way or another, whether it's a restriction on student visas or an intake reduction or other measures that slow, like increasing the cost of a student visa by more than doubling it. All of these measures will have an impact to reduce immigration. So I don't think it really does matter which major party a migrant votes for. The policies are very likely to be the same. Now, here's another interesting one. It's something that we talked about at the beginning of the campaign, but hasn't really showed up too much over the campaign. Do young voters trust the system enough to show up and swing the election? Well, first of all, I hope they do trust the system enough, because I can tell you from experience that the compulsory voting system certainly does work, and if you don't vote, you will be fined. So I hope that most young people who are of voting age know that already and will go to vote. But of course, once you get inside the ballot box, once you get inside the polling booth, what you write on the paper is confidential, and nobody knows which party you voted for, or whether in fact you lodged a valid vote. But whether or not they'll swing the election is a very interesting question. And there's a lot being done, particularly on the big divergence amongst younger voters on a gender basis, with females under 35 swinging very hard towards the progressive side of politics, whereas males under 35, while they have swung slightly progressively, tend to be much more likely to favour a conservative side of politics. So that big divergence within a generation is a new thing. It's not clear how that will be resolved, nor what impact that will have on voting. So I don't have an answer for you there as to whether or not young voters will swing the election, but I'll certainly be watching the results very carefully to see if that was the case, because there's a real possibility it will. How many jobs will a nuclear-powered Australia create? Well, that's an interesting question. And I know that this is also a political question, in that people are saying that nuclear power stations won't create much in the way of jobs. But the energy debate is much more important than just the number of people employed to construct any particular facility or keep it operating, because energy is at the heart of the economy. And cheap energy is one of the reasons why the Australian economy has outperformed over the last 50 years. And in particular, coal and gas powered Australia's prosperity because they allowed us to develop industries with a competitive advantage. That is, we had lower energy costs. As we remove that, we are not only reducing jobs in those sectors, but we're reducing jobs in others. And sadly, a number of large manufacturing facilities have shut down in Australia over the last 2 years because of those big increases in energy costs. A number of other energy-intensive projects and businesses are at risk if something isn't done to arrest the spiralling cost of energy in Australia. So a nuclear-powered Australia might not create a lot of jobs directly in the nuclear industry, but it will create a lot of jobs across the Australian economy. And it's important to bear in mind that not every impact of a policy is direct. And not only are there sometimes unintended consequences, there are also indirect consequences that should be considered when we look at any policy. Will nuclear power or renewable power be most beneficial to the Australian economy? Well, I don't think that's an either-or proposition. I can't see why we couldn't have both. What can parties do to help families live better and lessen the cost of living? Well, another very interesting question, because there's a broader question here. How much should governments interfere in people's lives? What responsibilities do governments have for individuals? And where are the limitations on those responsibilities? And what sort of freedoms are we prepared to give up? And what sort of costs are we prepared to pay to guarantee everybody's existence? And I think once we start drilling into questions like that, it becomes apparent that the answer is not an easy one. So I'd suggest that philosophically, the best that governments can do is make sure that the policy settings are right and get out of the way. And when I say the policy settings are they're right for individuals and companies to go about doing what it is that they believe is the best contribution they can make. But philosophically, there'll be plenty of people who would argue for central control, despite the fact we've seen that fail over the last 100 years everywhere it's been tried. Then there are all sorts of differences of opinion around that sort of thing. So that's a matter of opinion rather than fact, and I'll leave that one for you to decide for yourself. What is your opinion about voting for a non-major party? Well, I have a confession to make. I'm a bit of a political tragic, and I follow politics very closely. So my opinion's probably not a common one, but having studied politics and following it very closely, I think the two-party system is the least evil. And it reminds me very much of that old saying, democracy's a terrible system. It's just that it's better than everything else that we've tried. And I think it's a similar sort of situation with the two-party system. It certainly has its limitations, and it does produce some terrible things. But the flip side of all this is, to get things done, you need a strong executive. And if there's not one party that has control, has the ability to implement an agenda, you end up not doing the things that need to be done. And so while I understand a lot of people are frustrated with the two-party system and possibly feel unrepresented by it, if we go to a system where there is no clear majority in the parliament, actually doing the things that Australia needs doing or getting done could be very difficult. And I'd point to the experience in Italy post-World War II. Between 1945 and the year 2000, Italy had 57 parliaments. That's more than one a year. Can you imagine what it's like trying to get anything done in a political environment like that? And that could be the way we're heading if more and more people move away from the major parties and we end up with a fractured political system. So that's my concern. Once again, that's an opinion. You're certainly welcome to your own to agree or disagree with mine, but that's the opinion that I have. I think the two-party system is the least problematic of all the political systems we could have. Moving on to the questions. As I say, apologies if I don't get to yours, but please join us in the forum. We'll be talking more there. Tax-deductible home loan interest payments should be available to everyone earning less than $120,000. Well, that looks to me like somebody who earns $119,000 a year. People are prepared, look, there's nothing wrong with prosecuting your own interests in the political space, arguing for what it is you'd like to see that suits you. Obviously, if that's a personal argument, not everybody's going to agree with it. Do any party's policies threaten Australia's AAA rating? Well, yes, and I would say both major parties' policies do, because neither have properly addressed the biggest issue facing Australia, that is the lack of productivity and the debt and deficits that are stretching out to the horizon. And these are the things that are really threatening our prosperity. And while carbon dioxide levels in 2060 might be a concern for a lot of people, they should be thinking about debt levels in 2030 well ahead of that. Because if we continue on our current path, that is spending more than we collect and increasing our debt, the time will come where paying the interest on our debt will be one of the most significant budget items. And in that scenario, there's very little flexibility for governments or economies to improve. So hopefully that will become a political imperative. And to some extent, this is on us as voters. We need to let the politicians know that we're also concerned about the longer term outlook for Australia, and that productivity and debt and deficits are on our radar. That will help us keep our AAA rating. Will a coalition victory impact Australia-China economic, trade, diplomatic rate? Well, yeah, sorry, to read that properly. Will a coalition victory impact Australia-China economic, trade, diplomatic? There's no doubt that relations with China have improved under the Labor government after a particularly fraught period under the previous coalition government. I think if a coalition government were elected, there would be some concerns about the political outlook between the two countries. Having said that, there is a deep engagement between Australia and China that I don't think any single government could knock over. And while things can get better or worse, the reality is that Australia and China are now already tied together economically, tied together socially, tied together to some extent politically. So the reality is that while things may fluctuate depending on who is elected, the relationship remains in place. How can parties address Trump's impact on the Australian economy? Well, great question. And there's a bigger question here. how should Australia behave given that we are such a small part of the global economy? At just 2% of the global economy, what happens around the rest of the world is very important to Australia. We have much less ability to withstand things going wrong at a global level. And so thinking about President Trump, the sort of risk management we do as individual investors also apply here. We should have a diversified portfolio of trade partners. We should have a diversified portfolio of goods and services that we sell and buy from the rest of the world. And we should be careful about concentration risk. These are all good investment principles that apply to the Australian economy as well. So something to bear in mind. And I suspect that what we will see after the tariff blow-up is a reshaping of the global trading environment. That's all we have time for. I do apologise, we've gone slightly over time today. There are more questions, as you can see, that we haven't answered, and there have been more coming through over the course of the webinar. I do appreciate you sending them through. Please keep them coming and keep the conversation going by joining us in the Moomoo community.